Sadly, there is a war raging in the Ukraine. Russia has invaded the Ukraine. Does that mean as a trader, we should be trading the ruble? Stay tuned. Hey guys, warm welcome to you. All right, so it's a bit of a sad video, if you like, because, unfortunately, bad things happen in the world. At the moment, we have an invasion. Russia has invaded the Ukraine, and that's playing out as I speak. Literally, I think we're in day 4 of the invasion, and there's casualties, civilian casualties, and all that other stuff. And I don't necessarily watch everything that's going on because I don't want to be immersed in that, but I understand what's happening. I have a broader understanding and how that's impacting the markets, and obviously concern for people who are caught up in that. Just because we're traders, we're not callous. But every so often I do a video and we're talking about volatility, and that's caused by something negative. I think the last one I did was probably coronavirus. I think I've done one before. We talked about some impact of, was it terrorism or something? There's always something negative, unfortunately, and it causes the markets to move. And so, it's very sad that this happens in the world, but that's the world we live in. We have things that aren't always nice and pleasant. It's not all roses and milk and honey. And sometimes as traders we go, well, should we be trading this? And that's a decision for you to make ultimately. You say, okay, I don't want to trade it because I feel like I shouldn't be capitalizing on the moves. But then the flip side of it is you're not adding to the damage. You're not adding fuel to the fire. You're merely speculating on what's happened as a result of that. We have no direct impact on it. You trading whatever instrument isn't having a direct impact on, well, you could argue maybe if everyone's trading long crude, it's helping the prices go up and causing this. But you could say that with anything ultimately. But really, as an individual, you're not really having an impact. I believe you're not having an impact directly or increasing suffering or anything like this, or helping by not trading. It's almost a complete disconnect, even though one is caused by the other. But that's very personal. I understand some people say, hey, I'm not going to trade this when this is happening, and some people don't trade tobacco stocks, and maybe that's a different argument. Some people won't trade some of the commodities when there's a drought or something because they think that people are, this is trading, guys. Unfortunately, negative things happen and cause movements in the market. And so you've got to take your own personal view on it, absolutely, But my view is, hey, I don't have any impact with my trading on what's happening. I'm merely trading something that's a proxy to what's happening. And obviously we hope that everything gets settled out and there's a few casualties and all the other stuff that's going on over there. And some people are supporting financially with donations, some people are supporting other ways. That's by the by. This is not a channel about that, but I wanted to mention that. Okay, the question is, should you be trading the ruble? Because the ruble is swinging, man. That boy is swinging. USD, ruble, all this stuff is because obviously Russia's currency is getting decimated. Sanctions are just coming. They've choked off everything. They've blocked them out of payment systems, the SWIFT. They've just throttled back any transactions going overseas, any people importing, exporting, all this kind of stuff. Now, I've not dug into the intricacies of it, but needless to say, they've raised interest rates to 20%. And Ruble is just getting absolutely smashed. It's just smashed. Absolutely smashed. And so, should you be trading it? As a trader, should you be trading it? My answer to that is just categorically no. Now, if you wanted to invest in it and prepared for a complete catastrophic loss, and your stop loss is 0, then the risk, you take the punt. You go, right, I'm buying however many £1,000 worth of rubles. If you can still do it, I don't even know if you're allowed you to do that. And I think they're going to be better. If that's what you want to do, that's a different game. But from a trading perspective, are you trading on leverage, looking for a move from A to B? My answer is a categoric no. Why? Because you just don't know. The risk is massively open-ended. You might think, well, it's just going to get weaker and weaker, and I'm just going to keep buying above 100. It's going to 200. It's going to 400 a dollar. Yeah, but you don't know when you're in the trade. There could be some sort of intervention, some sort of headline, some sort of binary news that just halves it. Just who knows? Or you could be a little trade saying, well, I think it's easily going to come back, going to appreciate again. There's no way it's not. How far is it going to go before it comes back? You see, the point is that we're in such uncertain times with such catastrophic events that are happening that it's almost impossible to predict over a certain period of time. Now, people are forced into trading it because whatever business they're in, they're having to hedge this and do that, is causing these extreme moves. I'm sure there's some speculators in there. I'm sure there's some seasoned speculators who are prepared to sit through some of this stuff and have the deep pockets. But you know, for you and I as retail traders, most of us, if we're leveraged up, can't afford a 50% trim on it because it's going to decimate the account. And so just recognize that if you are getting involved in this, I don't even know if you can still access it on platforms or what's happening in terms of that, but if you can, I would strongly think about what you're doing and say, okay, yeah, are you being seduced by the volatility? Because there is volatility, yes, and that's seductive, can be, but don't be. I did a video earlier, and hopefully it's going to be up before this one. I talked about stepping back, picking your spots, picking your where to attack, and picking, you know, where you put your capital at risk. And going directly to the ruble, to me, seems like the most riskiest play, because any headline could come out and rip your face clean off, and that's the end of you. And is it worth it for that? I mean, yeah, you might be able to get big moves and might be able to get multiple R's, but you're not talking 1 R risk here, you're talking 1 AR, account value risk. And you don't want that. So something else you could do. Okay, why don't you start to watch, if you like to do that, how the ruble is affecting some of the other instruments. And if you're trading off a headline-based move, then go to any of these other things that are moving because of this war going on. Oil's moving, obviously, gas, natural gas, gold's moving, energy stocks if you like to trade your stocks, defense stocks, banking sector. There's loads of other sectors that are very, very sensitive to this as well, from an inverse correlation, a direct correlation way. You've got all your cryptos, you've got your indices, etc. The point is, there's so many other things to trade that are a proxy for this if you want to get involved in this, and you're looking at the ruble saying, wow, you know, look at some of the knock-on effects of, you know, do some homework and say, well, who's exposed to the ruble? What companies exposed to it, and is there a correlation with price action that's a little bit dampened, so when the ruble spikes, does this company get hammered a little bit because they're exposed to it? Do a little bit more research, be a bit more professional about it, rather than just seeing the ruble swinging around and going, I want to trade ruble, I want to trade ruble because it's swinging. Take one layer back and use those vehicles as a proxy for trading that if you want to trade the movement. That would be the way that I would approach it. But obviously it's up to you. You know, you understand the risks. It's a game we play. We know the risks. There's no rules as such. We just play within the boundaries of the broker and the system. But ultimately, you know, if you want to risk your whole account on something, you can do that. I would never suggest doing that. Absolutely not, because it's career ending if it's wrong. And yeah, you might get a jackpot hit. You might go, wow, I made 5 times my money on this mad move on the ruble. But is that in the gambling territory? I would argue that it probably is. Anyway, guys, take care. Please keep your risk managed. The volatility is good. I like volatility. You know, I'm a trader who enjoys volatility, but I'm picking my spots and being careful, and I'd recommend you do the same. Be very careful. And if it's too volatile, just enjoy it. Sit back, get your popcorn, and watch everything, all the moves play out. And from a price action perspective, it's a learning process. You know, we're sitting back and we're just watching these charts and we're just saying, this is interesting. How is it reacting to this? What's doing that? You know, and observing and enjoying the observation. Now, of course, there's an event that's causing this, and which is a negative event, and that's kind of a separate thing, of course. But from a price perspective, it's a learning event. It's for us to see how price is moving. So if you don't want to get involved in it, don't feel obliged to. All right, guys, take care. See you next one. Bye-bye.